Hey guys, we'll be discussing about the biggest topic that is on probably everyone's mind right now for over the past few days in terms of the stock market crash and everything else, which is because of the trade wars that has been triggered by a certain president. It has been quite a painful few days for quite a lot of people who has quite some funds in the stock market. I wouldn't say I'm not affected at all. Definitely I am. It still feels a little bit painful, or rather quite painful. I think my whole portfolio probably dropped even maybe about 10, slightly over 10% thereabouts. Even then, yes, I know there are people that drop a lot more because they are highly exposed to tech and all, but still, any money that is lost is still not a very good feeling at all. So let's jump straight into the news. Let's take a look over here. Singapore economy may be hit hard by the trade slowdown but there may be a silver lining, blah blah blah. Basically, the good thing is that we are the only country in Southeast Asia which the US has a trade surplus, which means that we will face the lowest, which is the baseline 10% tariff that they are stepping almost pretty much across the whole world. China, on the other hand, is getting as high as 54%, which is insane. And now we are talking about crazy fears that iPhone may even be going up towards $3,000. Because if you think about it, if the US is going to be slapping that much tariffs and basically the production, everything, and what they are trying to do over here. And by no means I'm not an economist, I'm not economy trained at all. I'm just sharing what I understand from my shallow perspective. So for those people who are, highly economic trained here and there, yeah, you may point out some things, yeah, but I'm just sharing based on my point of view. Of course, if you guys can contribute, then feel free to contribute in the comment, and then let's help out one another in this community. And from what I know is that if all these tariffs are going all around, everything will eventually become more expensive because there's no reason why the business will want to absorb the tariffs, right? And they will eventually pass on the causes to the consumer. And what is trying to do is that they're trying to shift all this production back towards the domestically. They're trying to produce it within themselves and hopefully reduce their trade surplus and then here and there. But I think it is not as simple as that. And then again, I'm not a politician. I'm not economically trained. I'm just sharing these based on my own point of view. So I don't think it's that simple. Anyway, countries around the world are threatening to retaliate and then give back their own tariffs, which is going to be quite hectic, unfortunately. And then the rest of the article you can just slowly read yourself. You can see over here a high-end iPhone can even cost up to $3,000. Basically, everything else jacked up. Running shoes, I need my running shoes. Please don't jack it up. I don't want to go back to army shoes. So, Apple iPhone, all those we already talked about just now. S&P lost the most, and even for Nasdaq also the worst day in percentage terms since the pandemic era, which is March 2020. Economists say over here that the tariffs could reignite inflation, raise the risk of a US recession, and boost causes for the average US family by thousands of dollars. And so you can see that the average families are going to be bearing the brunt of it. They are allies, right, supposedly. And all these will eventually trigger to us, which means everything will become more expensive. Later we'll talk about certain effects. Basically I think it works like a chain all around. And yeah, let's not jump the guns. If not, then we'll save them some time for that. That is more important. I see this chart over here is very saddening, unfortunately. Thankfully I'm not invested in most of them, but I can see a lot of people, I can see a lot of my friends, a lot of people online all crying here and there. I'm one of those, although I would say I wouldn't be crying that bad because my exposure is not that high compared to quite some people. Thankfully, then again, I'm not saying that I'm not affected at all. I'm still affected. Money lost is still lost, but then again, it's still paper loss. So money that I put in the stock market is pretty much that money that I don't plan to touch for quite a long time. So yeah, probably we just leave it as it is because of paper loss, paper gain until it's realized, right? And then this is a chart that we see over the past, I would say 30 years thereabouts, and we see that these are the global events across the years, right? and you can see the price effects. Generally, the big ones, you can see that the price dips, comes back, dips, and then after that go crazy over that, and then crash because of the great financial crisis. Over here, global financial crisis, GFC lah, during that period where the Lehman Brothers down and then everything else gets pulled down because of the mortgage-backed securities. And then over all those that you see in the sea, these are the cooling measures. W are the world events, and all these are the cooling measures here and there. And you can see during this period of time, volumes were very high because people were able to buy multiple properties at any point of time because minimal ABSD was not as high. TDSR wasn't implemented yet until 2013, and that's why people who have money just keep on buying, buy, sell, buy, sell. They were able to flip properties here and there until SSD got introduced back in 2011, and then the volume kind of dropped a little bit. And then after TDSR came in, you can see that the volume dropped a lot and then went up during this SSD reduction period and then drop again. And why is this over here? Because we are seeing COVID, which had a knee-jerk reaction, which I believe we will be experiencing pretty much the same thing. We will probably have a knee-jerk reaction. People will be sitting at the sidelines. There will be people sitting at the sidelines. We'll be discussing later whether it's a wise thing to do, for sure. I know that a lot of people say, IITT now confirm say go and buy. I'm not here to convince you to go and buy here and there. I'm just talking about numbers, logic. Whether you yourself want to buy or not, you have to convince yourself. Nobody is here to convince you. You have to look at the numbers, whether it makes sense or not. Then you go and do your whatever you need to do accordingly. But what we are seeing over here is actual numbers, actual data, and then we interpret from there, because since everyone has different perspective, right? After the knee-jerk reaction, suddenly it went up like crazy, volume over here. But keep in mind, these are still post-COVID period. If I'm not wrong, this one is Q1, Q2, then Q3. This is like almost circuit breaker, or pretty much circuit breaker. But you can see that I remember during that time, 2020, during that circuit breaker period, volume already start to go up because people were actually starting to buy over Zoom. And I remember that time when people were like, hey, got people buy properties over Zoom one. So a lot of them didn't even see the show flat because they couldn't visit the show flat. And then people started buying. And once people started buying, it's like, it becomes a very normal thing. A lot of people were buying through Zoom, and then the volume shot up. After that, after the circuit breaker was released, it became so-called worse in terms of the volume, and then high interest rate struck here and there, and volume dropped. So you can see over here that, but in the meantime, prices also still managed to go up. And then some people will think that, you know what, goes up must come down, which is technically not wrong, but if you apply it to the stock market, I think it's perfectly normal. Whatever goes up too fast, the fundamentals of the company cannot catch up, probably they will have to come down. But if you're talking about a highly controlled real estate market in Singapore, where there's a lot of cooling measures, where the large majority of the buyers are Singaporean families, and if you look at their asset liability ratio, which can be present, you can go and find it on SingStat. In fact, I think I showed it in my channel before somewhere. Can't remember which video, you can go and dig it up. But the ratio of assets to liability is very high. I'm not exactly sure about other countries, but we should be one of the higher ones. When we have this kind of situation, then will the families continue buying, especially if they can only buy, most of the families can only buy one? Will they be more willing to buy because it's a need? So they'll have to buy somewhere that they need to stay. Yes, there are people who rent, but a large majority will still want to buy wherever they want to buy because they're emotional. They have instant gratification needs here and there. But that's the unfortunate fact. And during this period of time, you can see prices kind of stabilize. And by the way, this is a chart of all the private condos, whether new, resale, subsale, whatever. All these are new private condos. So this is not inclusive of landed. Also, you can see over here, over the years, the key ones will be this one, and probably even Brexit we have no idea yet to what extent, because now it's still in the early development stage of how it's going to be running out. But what I'm trying to show over here is that when major global events, assuming it can be even, I highly doubt is as crazy as COVID, because basically COVID, the whole world literally stopped. For COVID, I don't think the upcoming trade wars is going to be as crazy as this one, but even this one that is so crazy, you can see the prices, they drop in general, but soon after the volume came back up. And is this the whole market thing as a whole, or is it only to particular sectors? So let's take a look at these few developments which are resales at that point of time, because you can see over here these particular developments, all these I especially picked them because they are close to MRT, basically Singaporeans favorite, right? And then Skyview, which is a Bishan, and then Yishun, and then Clementi, and then Aljunied, and then Pasir Ris, and they are, you can see over here the TOP years are pretty much very close to one another. And you can see over here that during this period of time, 2019, when COVID pretty much was coming in already, all the way until 2022, is pretty much about the same level. Okay, some are a little bit higher, some are a little bit lower, but you can see it's pretty much in the stagnancy phase, where it's almost like a 3 year staying at that same price level. So I'm not sure whether the upcoming trade wars will result in this. So for those of you who already bought resale recently at a very high price, especially those that paid peak prices, I have no idea whether we are going to be experiencing something like this, which I won't be surprised, because if you look at the amount that those like Skyview has actually gone up over the past few 2-3 years, I don't think it's unreasonable for it to be going sideways or even downwards, because you know what people like to say, right? Whatever goes up must come down, and then those that they like, once go down cannot come down, and so you can see a lot of double standard when it comes to comparison of certain developments that people like. But then again, I'm not here to tell you whether you're wrong or right. I'm just showing you numbers over here, and that's the whole point of my channel, right? And then back to this, if all this has already gone on over the past 2 to 3 years, then I don't think, like I said, it will be unreasonable for them to experience this again, because ultimately they are fighting neighbors that has managed to got in a much lower pricing. Alright. On the other hand, during the same period of time, let's take a look at this red one. You can see after COVID struck, right? It pretty much went down first, then after that took some time to recover, went down, took some time to recover, went down, took some time to recover. On the other hand, if we look at some of the post launches at that point, you can observe that all these were uncompleted during the COVID period, and a lot of them were stuck in terms of the sale initially, and also the construction, because of manpower they couldn't continue work, right? And then there was the whole completion delay, because they couldn't find enough manpower here and there. But you can see during this same period of time, prices didn't actually drop. Prices actually held still minimal, or even went up during the same period of time. And this is because there's a difference, because all these are basically resales, like what we mentioned. They are buying from former neighbors, whereas this one is buying from developer, where the developer control the prices. Of course, not all the developers will increase the prices. If it's a pretty much a bad development in terms of fundamentals, not as sound, then I won't be surprised if the developers drop the price. In fact, we saw a few. I remember 8 St. Thomas had a fire sale, 38 Jervois had a fire sale. So all these fire sale products obviously were a little bit fundamentally flawed. And even in such a strong market, recently we saw one burner had a fire sale. That means you can see that all these are weak fundamentals project, and I still don't understand why people will want to go into such development. It's a little bit risky. Some I know already, like example, you look at one per bank. I say how many times already. It's not as exactly as fundamentally sound. Today we see the chart. I mean, I don't have the chart over here right now, but I remember recently I just saw maybe like yesterday or something, the chart was something like that. Right. So those that managed to get at the cheap prices, I think maybe even close to 2,000 flat, I think they were very safe. Those that got in at 3,000, I think they better really enjoy the location. They paid for it. They should enjoy the location. So this is an example of what I mean by basically reckless buying when it comes to $1 million investments. Of course, unless they use it only for own stay, then it's not that bad. But if they're using it for investments, I think it's too reckless of a buy to be sinking that much money in for something like that, unfortunately. So before we move on, same thing again, what I'm showing here is that there are different types of developments and with different kind of patterns, and that's why you can see it's not exactly fair or rather logical to be just using this as a gauge. Okay, over here by right, supposedly during this period of time it has come down a little bit, but over here this one come down, came back, took some time to come back, and then on the other hand this one was crawling up along the way because of developer price staging. Because same thing, the reason why a lot of people are going in for investment over here is because they protect they basically protect their downside, because the developers also want to sell more expensive, right? And nowadays we are back to probably during this era, probably assuming it's as bad as COVID, right? Then with that much fear, will developer be a little bit more cautious when it comes to their pricing? So we have a look at this. I wouldn't really call it a diagram, it's more like a little bit like a mind map over here. What we are facing moving ahead is that we are looking at a lot of uncertainties from these upcoming trade wars. The first one we will probably be looking at is the construction prices and everything else. I'm not just talking about construction, but it's just a keyword for me to remember lah, hor. So first thing, construction, and also a lot of other raw materials. All these are going to be more expensive, and as such the businesses pass the costs to consumers. Will this eventually lead to inflation? Is a question mark, because everything supposedly is going to be more expensive, right? How they going to sort this out? Let's just move on to the next point. And if inflation goes up, will the Fed be able to drive down the interest rate like originally planned? They plan for all the rate cuts, they probably have to pause it. If inflation stays stubbornly high or even gets back to worsen, which supposedly if the tariffs really work, they should drive everything up and make inflation worse, which defeats the whole point of interest rate drops. But then again, you see, that's the part that now we are facing, the part where there's, like we say, there's a lot of uncertainty. Because if the US technically goes into recession, then shouldn't the Fed lower the interest rate in order to spur job growth and try to reduce the unemployment rate? So that's the other question, that we a lot of things that we don't know. It's not as straightforward as, or A lead to B, B lead to C, C lead to D, that kind of things. Then again, most important thing is, of course, if you are irreplaceable at work, then nothing too much for you to worry about, I would say. As what we mentioned just now, stock market crashes, a lot of things already become red, not just red, it's become super red, and a lot of people are panicking. We are seeing a lot of cries on the street. We are seeing a lot of sadness, frustration everywhere, which naturally will lead to buyer and seller fear. Because why buyer and seller fear? Buyers fear that maybe this one is not the right time to buy, and then we should be sitting on the sideline, observe, which is not wrong. I can tell you that there will definitely be people looking to sit on the sidelines because they are like scared. What if I don't buy now? What if I buy now? Regardless, those people who sit on the sidelines, they will go ahead and sit on the sidelines. Whereas those people, they are a little bit more urgent, or rather they are not so, they know at this point, if the stock market is not as reliable, there's a lot of uncertainty moving ahead, and they don't want to be parking the money there. A lot of people will be saying like, oh, you get to get your funds ready, you need to chiong in because everything is at the fire sale. Yes, correct. But the thing is that if let's say you buy the wrong stock and the wrong stock actually goes down, which I had experienced before. Luckily it's not a big sum, but yeah, I thought like, a company that is like around for 100+ years would die. But we saw what happened to Lehman Brothers, we saw what happened to Credit Suisse, we saw what happened to all these companies. It happens. If you do happen to accidentally put a large sum of money there and you have trouble cutting loss, then that amount of money will be headed to zero. And it is a very, very real thing, because a lot of people, we don't want to cut loss. We want to make money, but we don't lose money. That's the problem. So that's the risk of stock market. High returns comes with a lot of high risk. So buyers, those who are ready to sit on the sidelines to observe, nobody can stop them. But those people who are more urgent, they or rather they know what exactly they want. They feel that, hey, I'm not gonna be buying this house at least for a few years. By then, so far we haven't really seen a recession that has lasted like more than 1 to 2 years. And if that's the case, will the prices by the time they recover post recession, will it be a lot higher? Will it be a lot of people want to catch the I want to catch the bottom, which reminds me of like the I think yesterday was Friday, right? Remember I was looking at a certain stock, and then the certain stock really dropped until ridiculous pricing. I'm like, is this stock actually gonna go bankrupt? And it's a very big company, and then I'm like, should I buy in already? Should I DCA? But who knows? Maybe it will drop even lower. Let's just go and observe. And then uh, I went ahead and slept. I woke up, the stock rebounded like mad, gone up quite a bit. Basically, I think from the time it went down to the trough that I saw, the amount that I saw to the amount that it went up, I think it's like more than 10%. So you can see there's quite a big of difference. But the what's the point of telling you this is that you can never catch the bottom. Nobody can catch the bottom. So, and in fact, I don't even need to catch the bottom. In fact, I don't even buy my properties at the rock bottom, because a lot of people focus on, I want to buy at the rock bottom. But in the meantime, the first thing they miss out on the opportunity. Second thing is some people may buy the wrong bottom, but they sell at the wrong timing. Ultimately, you need to be buying at a good timing and also exit at a good timing. And timing may not exactly be literary timing. Your timing can be a right price, because at any point of time during the past few years, there are definitely products that are expensive, but they may have good value. So the point is that you need to be able to spot the right opportunity at the right value, and then you exit at the right time, and that is how you make money in real estate. Back to the buyers, those who want to see at the sideline will see at the sideline. Those who have to go out and go and buy, they will go and buy. Ultimately, if you go and look at the resale market, there will still be people who want to shop around. Granted, the volume will probably drop, I feel, but there will still be activity going on, because those people who have to buy, they will go ahead and buy. Whereas sellers, just a quick touch point on sellers, they will be thinking, hey, is this the right time to sell? Now some of them don't want to sell because they scared that they may not find a good price. And some of them may, if they are holding on to not so popular properties, they may find that the movement may be a bit slow, because buyers that are more cautious or more scared, they may not come over to buy. And that's something that the sellers will be facing. So back to this, we need to know that the Singaporeans fundamentals, how strong they are in terms of the fundamentals, in terms of their finances, in terms of their income levels, the reserve funds that they have, the amount of funds they have to upgrade, and then the amount of asset liability ratio, and then how many people are actually still trying to come in as a foreigner, trying to become a PR trying to become a Singaporean. And then will they be buying at the PR stage, will they be buying at the Singaporean stage? And all these are also contributing to the demand of the real estate side. And those are the people that Singaporeans don't want to buy. They don't want to pay ABSD. I can guarantee you, even with this upcoming thing, where there's a lot of fear, there will be PRs that are very willing to pay 5% ABSD. Foreigners probably not lah, but maybe those that has ABSD remission, they will still go ahead and buy. But there will definitely be PR that are more than willing to pay the 5%. Or you don't want to buy, or as a Singaporean, or such a wasted. But I'm still gonna, because the thing about PR is that they can never guarantee whether they're gonna get their IC unless they are providing a lot of monetary value to the economy. Then probably. And then the other thing will be that once the money that people pull out from the stock market because they're trying to exit before it gets worse, or they already have funds, they don't dare to go in, they don't know what to do, will they be parking their monies inside real estate, which in Singapore is probably a more safer and logical choice because of the stability of the market due to the cooling measures, and how the government has been closely monitoring and trying to not let it run like mad, even though it has really, I agree, it has gone up considerably. But if you look at the fundamentals, you look at how stable the market is, I really don't think the market is going to be running that crazy for the next few quarters. It may stagnate, but we will know for now something is going to happen in 2025 in Singapore. I don't think they are going to let it crash for sure, because it's not going to look good on them, and they will be in a way protecting our, as I believe so, because I think if not, then I will be really panicking. I don't think I'm panicking right now, other than the stock size, which I really don't think I have too much control over that. Other than liquidating, I don't think I'm going to be doing that. I'm just going to buy and hold, because I think those companies I feel are pretty fundamentally sound lah. At least for my real estate side, I'm not too concerned. In fact, I'm not too worried about whether I should sell, or what will happen when we crash. A lot of people will be thinking, now the whole thing will crash. But I think if you buy the right one, there is nothing much for you to worry about, because you need to be holding 3 to 5 years in the first place. But a lot of people are thinking, hey, today I buy, tomorrow crash. You can't sell it tomorrow. You can't sell it in 1 year's time. You can't sell it in 2 years' time, unless you're willing to pay the seller stamp duty. So why are you so bent on trying to enter at the right time? Because sometimes maybe you may enter at a rock bottom price, but you enter at a rock bottom period, but you enter at the wrong development, you enter at the wrong price, because that one is just a general trend, but you don't see the exact specifics. And then the other thing is that, will developers be more cautious? Will they be more fearful themselves also? Those with more stock, will they want to be more, or rather those that are upcoming, will they be more conservative in things in terms of their launch prices? And those with very very little stocks, I think very unlikely they will drop price. In fact, they may still increase the price, because they have time to sell and they want to protect those first movers. But unfortunately, if the stock is not moving, which example, the recent one, but and their ABSD already reaching, then of course the price will have to come down, because they don't want to be paying the ABSD penalty lah. But for developers generally, they will want to be more cautious if they have some project that is upcoming launching. So in a way, will this be an opportunity for you to be getting good deals, as compared to the period where everyone is like chonging with a hell lot of checks, with thousands and thousands of checks in developers' hand? Will they be more willing to? Will they be more ambitious and try to drive up the prices? That is something a lot of people don't see. They will be thinking, yeah, what developer come down, what the prices, it's not good So developer also will have to, they also have to cater to the market sentiment. And how do they look at the market sentiment? Of course, they look at the check also lah. I mean, it's not just that, but it could be one of the indicators. So those who are willing to go and bet, may want to go ahead and go and try. But those who are fearful, by all means, stay on the sidelines. But it same goes for those people back in 2020, where they're like, everything is gonna crash. But then now they look back, they're like, last time should have just bought. And I believe in 2 to 3 years to 4 years time, we'll be experiencing the same thing. Last time during the trade wars, right? Last time should have just buy. History always repeats itself, so I think you guys know what I mean. And most importantly, if you do have real estate, the most important thing is that you need to have holding power. And if you have holding power, pretty much you don't have too much to worry about. I mean, the reason why I'm not too worried, or rather worried at all, for my real estate investments, is that because I'm holding power. If it's not selling, or rather transacting at the right price that I want, why am I forced to sell? Because I don't need to. I can still finance my properties. I can still finance relatively in peace. So there's no reason why I need to be forced selling myself. In conclusion, I think I'm pretty much glad that I'm invested largely in real estate, thankfully. Some people are like, I think maybe 60-70% in stocks. I think now they are really panicking like crazy. For me, it's like only less than 10%. And I'm looking at real estate from the mid term at least, which is like, I don't think I'm looking at it short term for sure, because it's minimum 3 to 5 years. I'm mid to long term. So I think there's not too many worries in terms of that. Most important thing is I know my fundamentals are taken care of when it comes to my developments. So I don't think it will be affected too much. Maybe at most it drops here and there, but I'm not forced to sell like I said just now. So I'm not too worried about that. Real estate market is highly controlled and stabilized by the cooling measures, thanks to government. And like what I mentioned just now, when it comes to the stock market, what goes up must come down. I think it is really true. Eventually it will still go up, but if the company is good, it will still go up, but it should go up in a more gradual manner. But those that like wow, five time in don't know one single year, I think the fundamentals hasn't caught up yet. I'm not gonna be naming a few specific stocks, but I think you guys know what I'm talking about. So, but for real estate market is very different in Singapore because of how everything has gone up. Prices of labor, construction costs, land costs, everything has gone up. So it's not because the developer want to sell you expensive, it's because everything else is expensive. In fact, the developer's margin nowadays are not really exactly making that much. So it's not that we have a choice. I mean, in a way, if they bid the land too cheap, the government will want the award, and then there's no point because they are just wasting time and money trying to plan and bid for the land. Whereas on the other hand, back to the stock market, those with a lot of stock exposure, they will be worrying like crazy. With high risk comes high rewards. So also maybe high losses as well. So you gotta take note. I'm not too good in terms of um, I'm not good at all for sure when it comes to short term trading. So I think that's not my appetite. If I want to be buying stocks, I'll be buying something long term. I do have stocks that I plan to hold until I retire. So and those money I pretty much think of it as throwing away. So I don't have to worry about those kind of stocks. And those stocks form a large part of my portfolio. Then again, back to as a buyer, I think it suits individual appetite whether you feel it's the right time to buy. If you feel it's a messy time to buy, there's a lot of fear in you, then no right, no wrong. But if you feel that eventually, opportunity comes when there's a lot of fear, when developers have a lot of fear, or certain sellers, hopefully, I think sellers are still probably most of the sellers are still pretty much staying in the bull market point of view because sellers will always want to sell high. And whereas developers, if they have a lot of stocks, they will want to be a little bit or rather a lot more careful in pricing their product so that they can clear most of their stock and leave the tail end for them to push up the price. So those that have a lot of stock, then you guys may want to be able to be on the lookout for the right opportunities given the right fundamentals. So these are the things that I tend to do for my clients. So I think that is something I can say that now my clients are already are experiencing a loss at all. So because it has to be logical when it comes to a multi-million-dollar purchase. A lot has to, if you want to protect your own money, you have to be logical. You cannot be emotional and buying whatever you want at whatever prices. I don't care what kind of price. I've seen this kind of people. I realize it's very difficult to connect with them on a logical level. So yeah, let's just move on. So anyway, some people feel that recession is a better time to buy. Some people feel it's fearful. I think it's normal. Like I say, individually up to you. I'm not here to convince you whether you're wrong. No, you're not wrong. If you feel it's not the right time for you, by all means, I don't think you want to be convinced if you're not really convinced. And like I said previously, I think the volume is going to be dropping because of these people they are sitting on the sidelines, whereas those people who are smart enough, they will go ahead to be on the lookout for the hunt for good properties to hold. Okay, key thing is hold. It's not flip because the days of flipping within the next few days to 1 2 years are gone already. We need to be holding something at least for 3 to 5 years. In the final conclusion, I think those people who are still looking at real estate, as long as you spot the right project, you know how to spot the right project. You have a very sound logical exit plan. It's like I still remember seeing people. I think of the image. People shouting what ah, buy Jaden at 2008 PSF or how are you gonna exit, man? I really don't know. So but people are like that. So maybe it's the MRT thing, or they see MRT, they sell on the logic also become MRT already. So so if you're buying, still buying something, whatever it is, new post, sub-sale, resale, whatever it is, a landed condo, HDB, make sure you're buying the right thing at the right price. And if you do happen to plan to exit eventually, most important thing is you need to know when is the right timing and right pricing to exit. So that will be all we have for today, and hopefully Monday opens not as much blood. I think there's still going to be blood, but let's just see how it goes. So take care, guys, and see you guys till then.